What is the biggest trade-off that people miss typically when they're looking to compare buying property in their own name, so investment properties in their own name versus buying REITs? You touched on one before, which was awesome, which was the leverage side. So obviously, when you buy a share, that is the cash that you're purchasing it with. It's not like you get a 5-to-1. So in that example, it's I might buy $1 million property and I put down 20% deposit, and the bank goes and gives me $800,000, and I get the return or the growth on all of it. So the whole $1 million, as it goes up in value, I get the return on that. Where in a REIT, when you buy the share, that is the cash that you're putting over to purchase that share. Now, you mentioned right back at the start of the episode the idea of you were thinking about refinancing and using some of that debt to purchase REITs as a way to offset it. Do you want to dive a little bit deeper into that, and if there's any other kind of trade-offs between like REITs and your own personal property investing?
Well, let's start on the leverage component. So you have to understand that the REIT itself might be using leverage. So you might invest in a REIT and they might have a certain LVR they run at. So they're using debt in the REIT itself. So you could get leverage within a REIT. You don't.
Yep.
Yeah. And again, that's something you would want to look into because maybe the LVR is too high and that's not something you're comfortable with. Or it might be too low and you're like, there's not enough leverage here. But there is leverage that is created within REITs, and that does happen. The other side of the balance sheet, though, is like you personally, is like in this case, could be using just straight cash. It's like 100% ownership. There is no mortgage on the money you're using. Now, the strategy I was thinking about, and again, this is like high risk, wild. Please don't do this. I'm not advocating people to do this. This is for like, what if you refinanced a property and created more debt in your, with your own self? We'll just call it personally, and then use that money to invest in REITs. It's the same idea as like, what if you pulled equity out of one house to be the deposit on your next house?
One. Yep.
Yeah. So I was just looking at I didn't do this. I was just looking at ways where I could get leverage outside in my own name and then also get leverage inside a REIT and potentially like gear up returns even further. Because I might be running, 50% debt on the REIT purchase and myself, and they might run it in the fund. And then it's like, wow, I've just juiced up returns.
Leverage on leverage.
Completely. So that is something I looked at and considered in a big way. But the implications, though, and this is where it gets really interesting, is that you can't necessarily borrow against a REIT. So if you've got and this goes for shares as well, just because they're so highly liquid, right, and it isn't secured with the title that the bank holds like they do with direct investment. Let's say you've invested in a REIT and let's say you put $1 million in, same example, and it's gone up in value and now it's worth $2 million. The bank isn't necessarily going to go, oh, you can borrow $800,000 against that.
Against that, yeah.
No. So my conclusion for me at my stage when I was in accumulating is I want to have as many options as I can. It doesn't make sense to me to necessarily look at that. So not having an equity component you might want or need access to at a point was something that I took consideration into also.
It's interesting because this has popped up a couple of times in my investment journey. I believe in the United States they can.
Yeah, they definitely. And there's different rulings around what you can do with their tax code.
And this comes back to another one of the like, if you're consuming information that's like not location specific, how you can get caught. I still remember being on the investment journey and people coming to me asking about, do we get a fixed interest rate on a mortgage for the life of the mortgage? I'm like, no, that's a US. Like you've been reading US books. And so, yeah, I'm actually really glad that you walked through that one as well. It's just Australia's different. We're a unique kettle of fish.
Just to go into that a little bit further for people that don't necessarily understand, in the US, like their real estate market is very cash flow focused. And their share market is very growth focused. They have like much lower dividends in general than you would in Australia. Australia's kind of the opposite, where it's like we offer significant dividends and franking credits, but then our property market is set up for growth.
Yep.
Now, because of that, the dynamics are very different. So if you're someone in the US that wants to invest in stocks, it's like you get to run the deferred tax game very differently than you would in Australia. And I won't go into it, but the borrowing thing as well. Like many people will gear up their portfolios. They've got access to a whole range of different vehicles that we just don't have here.
The financing available is magical.
They've got some pretty interesting financing in property as well, right? Our system is much more heavily regulated and direct. Like vendor financing is a huge thing in the States when it comes to property as well. Not to make this as an Australian and US comparison, And it's not meant to be that. And I'm sure if people look into many of the things I've said in this conversation, like there's layers to what I'm saying.
Totally.
These are general guidelines. I'm sure there's examples of REITs where there's a difference, and I'm sure there's examples across this conversation. But I do hope this paints a picture at a broader level for people to just gain some educational knowledge around this so they can talk to people about specific things like financial planners and whatnot.
All right, fellow property investor, if you loved the value from this short video and wanted to know more about how you can win at property investing, check out the full episode by clicking the link on your screen or in the description right now. Alternatively, click subscribe and you'll never miss another one of these videos.